if you are watching these videos, finance videos, you are doing well already. You are doing fantastic. You are doing well for your family. No matter if you are up or down, if you've made a lot of money, if you've lost a lot of money, you are in the game. And especially if you're watching these videos, you're long on Tesla, you're going to provide your family with some great things over time, guys. So just want to let you know you're also doing a fantastic job. I'm a dad of 2 myself as well. So we're going to go ahead and do the typical dad thing and go hit the barbecue in the lake. But before we do that, Cathie Wood just sold more Tesla stock, and according to Barron's, she might not be done yet. So before you see these headlines and people's false interpretation on why Cathie Wood is quote-unquote selling out of Tesla, as some people are going to say, we need to give you a little bit of clarification. What does this mean and why is she selling? Last Friday was also quad witching, and what did Tesla do? Well, the stock rallied 2.3%. The indexes didn't do so well. The Nasdaq was down over 0.5%. The S&P was close behind it. So where do we go from here with this rally in Tesla? Does Tesla continue to rally? Is there some downside pressure coming for our markets? I think you're going to want to hear what's in this video. But before we get into it, happy Father's Day. If you guys also want to come trade with me live in real time, get notifications every time I make a trade on Tesla or any other stock or option or future or whatever we are trading for the day, link down below in the description of this video. We're also going to have a newswire over there, as well as some tools and tricks that you can use in your trading strategy, like how to day trade with options with an account less than $25,000. And we're going to be adding content on real estate as well, how to get into rental properties, find good tenants, create value where there might not be value. We'll even assess your properties that you are looking at getting into and try to see what kind of value you could create as well. So a lot of cool things over there. Link down below in the description of this video or in the pinned comment. Nonetheless, let's get into all of this information. So let's first start with the fact that Cathie Wood just sold more Tesla stock. Cathie Wood, as of recently, if you look back about a week or so in my uploads, you will see that Cathie Wood sold Tesla for the first time in a long time, and she sold about $68 million worth of Tesla. Now, let's get into this, and then we'll talk about where Tesla's going to go from here. So Cathie Wood sold another $16 million worth of Tesla stock, another 62,415 shares of Tesla. And according to Barron's, she might not be done. Now, why she is doing this is pretty simple. So Tesla stock comprises more than 11% of ARK Innovation. Practically speaking, 10% seems to be Cathie's rule of thumb. She doesn't want a position to get above 10%. So Tesla has recently seen a lot of gains recently, and she thinks the stock will 8x by 2027, a compound annual growth rate of 66% year after year after year. But hard part is, Tesla is now over 10% of her portfolio. So that's the simple reason of why she is selling Tesla stock. She obviously still thinks long-term Tesla shares are going much higher. And if Tesla does pull back some, in which we'll talk about here in a second, she's going to look to be a buyer of that weakness, as well as most of the markets, I would imagine. Short sellers are even down $12 billion. There is a larger short seller loss currently than 2021, when Tesla was also ripping and hitting all-time highs. So there's going to be a lot of buying pressure from a lot of different potential sources here. That's why I expect if there's any downside to Tesla, it's going to be a consolidation phase. It's going to be a volatile up and down kind of period. You could see big down days and big up days following each other. This is actually a healthy thing if that happens. You want to see Tesla do what Nvidia has done. And what I mean by that is getting the RSI down and also hitting new highs during this cycle or this most latest rally. You can see that just right now, we are not at the highest level of the RSI that we have seen recently with Tesla, but the stock on Friday hit a new high for the cycle. That is because on June 14th and June 15th, Tesla stock was actually down about 1%, combining these 2 days. One day down 0.74%, the other day down 0.35%. It was very volatile. It was very up and down. The stock never broke under 250 in regular trading. In pre-market, the stock hit 248 one of these days, but instantly bounced back. You showed a lot of support at that 250 level, right? You can see in here, these are the consolidation days that I was pointing out. Stock broke under 250 only in pre-market and then ripped as soon as you opened for trading, well back above 250, hitting a high this day on June 15th of almost 260, showing a lot of support at that 250 level. But what this sideways trading action did is got the RSI down, and the RSI is important for a couple reasons. A lot of people look at the RSI as a reason to short Tesla to give the stock downside pressure, which shorting Tesla has obviously not worked out. And we're going to look at the option activity as well and look at where the short position currently is for Tesla, because like I said, I think that can fuel some more of an upside rally here. But long story short, you want to see the RSI come down. But the RSI does not have to come down because the share price is falling. That is a myth. If you look at Nvidia, Nvidia is a great example of this. Nvidia's RSI is right here, but the stock is hitting new all-time highs. The highest level on Nvidia's RSI was about 86. The RSI currently is at 74.5. But again, the stock's hitting new all-time highs. That's because Nvidia really traded sideways for a period of a week or so and then continued to new all-time highs. So the pace of the rally slowed down a little bit compared to earnings when Nvidia rallied almost 25%. Now, I think it's also important to point out that, again, quad witching was on Friday. So you typically see higher volume on quad witching days. And it's a bit of a mixed reaction following quad witching. Because on quad witching, you see single stock futures expire, stock options expire, index futures expire, and index options expire. So 4 major asset classes worth multi-trillion dollars. I believe this quad witching was worth over $4 trillion this time around. So you see that capital get deployed in other ways. Obviously, a lot of people were long in this rally. Some were short, but a lot of people were long in this market to cause this rally recently. How does that money start to actually position after this quad witching? So Monday is going to be a very important day. If you go off of the face value of what we seen on Friday, the S&P was down 0.33% and the NASDAQ was down 0.5%. That positioning might be a little bit more negative this time around, but I could also argue the fact that there's still underexposure to technology, and these hedge funds, these institutions, they got to get exposed to technology. There's a little bit of FOMO out there because you're going to start to lose clients if you're not keeping up to par with what's happening in the S&P or the NASDAQ. So there's a little bit of a mixed bag here. And if we look at some of the quad witching dates for 2022, they were March 18th, June 17th, September 16th, and December 16th. So March 18th of 2022, the markets actually were close to a high, continuing on a rally, and then you got the sell-off. If you look at the next quad witching, which was June 17th, the markets, go June 17th, the markets had actually fallen into quad witching, hit a low, and started to rally during this August 2022, kind of the big rally that we had seen during 2022 that was sizable, that the broad markets participated in. Then you come to September 16th, and the markets sold off after quad witching over 10%. And then you look at December 16th, 2022, and the markets basically hit a low right after quad witching and started to rally. So it's very mixed, and there's not a definitive, like, this has to be negative, this has to be positive. So we really need to see how things evolve from here. Now, if we look at kind of the week ahead and what's going to be important, well, we don't have a lot of economic data for a while here. On Monday, you have building permits, 8:30 in the morning that comes out. Not going to be important. But you are going to have Fed Jerome Powell on Wednesday and on Thursday, as well as a lot of other Fed speakers. And what we got on Wednesday last week was a very hawkish summary of economic projections, but a Fed Jerome Powell that was really dovish, that did not align with the hawkishness of the SEP. If Fed Jerome Powell didn't want to sound so dovish, this is going to be his chance to hawk down on this market rally, to make stocks fall. That is going to be your biggest risk for this market here in the short term. Now, as you guys probably know if you watch this channel and you've seen a couple videos now, July 2nd is going to be a big day. That's when we're expecting to get Tesla's Q2 delivery numbers. And economists and analysts are expecting around 440,000 deliveries. I don't think a lot of people want to bet negative on July 2nd. I don't think a lot of people are going to try to forecast, I should say, a negative print here, or coming in less than expectations. We've seen positive delivery numbers so far out of markets such as China. Europe looks to be doing well. America looks to be doing well. Tesla's probably going to beat that estimate. So here in the kind of short term, there's a lot of short positions that are going to be jumpy heading into July 2nd. If we take a look at where those short positions currently stand, there is over $23.5 billion of short positions in Tesla stock. And Tesla shorts are down more in 2023 than they were in 2021. Down over $12 billion. Shorts were only ever down about $10 billion in 2021, and Tesla stock hit new all-time highs during that same period, going from about $200, in which kind of where we are now, about $200, $250, to $400, to Tesla's all-time high. So I think this massive short position, which is up 61.28% in the last 3 months, some of those shorts covering can likely give you a short squeeze and keep Tesla at these elevated levels that we've seen during this rally, or even start to really boost the stock after July 2nd, after we get a better than expected delivery number. As far as how hedge funds and institutions are positioning their portfolios in Tesla, on Friday, you've seen 507 hedge fund and institutional orders worth $373.5 million, positive order value of 72%. Over the past week, you've seen 2,800 orders totaling $2.36 billion with a positive order value of 70%. And a lot of people are targeting up to $300 per share, even as soon as June 30th, about 2 weeks from now. Some of these orders are extremely bullish. Some of them are targeting $700 by the mid 2024 time period. Or look at this order for August 18th, a 385 call with a break even of 388. That would be a $120 move from here. There's a lot of bullish positioning, and that leads me to believe that we're probably going to continue to see a bullish rally in Tesla stock. But again, seeing a consolidation phase, a slight down or up move would be bullish as well. You need to get the RSI down preferably before you continue to rally from here. And I think it's also pretty clear 250 served as a support over the last week, and I think it will continue to do so. So I don't really expect Tesla to trade under 250 really anytime soon before July 2nd. It's possible you dip under there, but you're probably going to find some solid support around 250. Now, I personally think there's an over 80% chance Tesla beats 440,000 deliveries for Q2, and about an 80% chance that Tesla would rally over $300 shortly after July 2nd if that beat did occur. So I think mix this in with kind of the short positions being the way that they are, Tesla could rally exponentially higher after July 2nd. Could rally as high as 350 or all-time highs. Just depends how strong the beat is on Q2. If Tesla gives us any updated guidance as well, that could also be huge. GM and Ford just came out on Friday and said if the pace of deliveries and sales keeps up throughout the rest of 2023, they're going to blow past their full year guidance that they put out in the beginning of this year. And I think Tesla is also in the same camp as them, likely in a better camp, since even as recently as last week, all Tesla models now qualify for a $7,500 tax credit. So I have a hard time believing GM and Ford are doing well and Tesla is not doing better than them, essentially. So that is going to do it here in this video. Again, happy Father's Day. Thank you for tuning in. If you are watching these videos, finance videos, you are doing well already. You are doing fantastic. You are doing well for your family. No matter if you are up or down, if you've made a lot of money, if you've lost a lot of money, you are in the game. And especially if you're watching these videos, you're long on Tesla, you're going to provide your family with some great things over time, guys. So just want to let you know you're also doing a fantastic job. I'm a dad of two myself as well, so we're going to go ahead and do the typical dad thing and go hit the barbecue in the lake, all of that good stuff. So you guys have a great rest of your day. If you guys want to come join the trading group, link down below in the description of this video as well. Thank you for watching, and I will see you in the next one.